Hello, everyone. Welcome to this live session. I want to provide some information today on how you can get caught up basically on your back taxes if you owe back taxes. Or we can also look at some ways as a business owners how you can prevent back taxes. Hi, Kevin. Thank you for being here. So when you look at tax debt and owing back taxes, I don't think business owners should be afraid of it or anything like that, because it's an easy trap, I call it, for business owners to get into. And the reason why I said it's a pretty easy trap, because the way how the tax system works, and when you have to go and do your filing, it's like a year behind. Say, for example, for 2017, you will file your 2017 tax return in 2018. So a lot of times, by the time that you're supposed to, sit down, relax, breathe, and catch up onto this tax stuff as a business owner, an entire year has already passed. You've already, maybe spent all that money that you earned for that year, and it seems like it's behind you. But now in April or March or whenever you figure out your information, then you find out that you owe this money for taxes. So what a lot of business owners will do is that they will go ahead and extend their return to the end of the year, which a lot of times it puts you in a worse position, because a lot of people don't really know that when you extend your return, you actually don't extend your payment. You only extend your filing. So if you miss, even if you file an extension and if you owe money at the end of the year, your penalties and so forth is going to start adding up on the due date originally for the payment, because filing an extension does not basically extend your payment due date. That's just how it works. So your penalties will start adding up even when you file an extension. So there are two things that happens in 2018 currently if you extend your 2017 return and you owe a balance. So you will have that old balance from 2017 that is due, plus 2018 taxes starting to add up. So you're now catching up until 2017, but 2018 is also due. So this is one of the reasons why when you extend, it becomes such a bad idea, because when you file in September or October, then it gives you such a short period of time to say, okay, this is the amount that I owe for all the way back in 2017, and now in 2018, I have only a couple months to, make that money or put together that money for 2018. So that's why a lot of business owners, they keep, it's easy for them to basically, before you know it, owe 2-3 years in back taxes without knowing. And it's basically, just, running your business and not, paying much attention. And it's, as I said, it's an easy trap to get into. I just want to make sure that everyone is hearing me. Janice, thank you for being here. Thank you, everyone, for being here. And one of the things that you want to also avoid is, don't think of it as like a credit card. If you're charging your credit card and you're not able to make payment on the current amount, every single finance guru out there will tell you that when you're making your minimum payment, before you know it, you're going to have a huge tax debt, credit card debt. And, your tax debt basically works the same way, that, if you're not able to pay the full amount each year, then before you know it, 2-3 years on the road, you're getting a letter that your account balance is like $10,000 or something like that. So this is why you should avoid this. And most business owners don't see it coming, and it's super easy to get into. And the biggest problems that I found two issues why a lot of business owners get into this issue. And one of them is the lack of the actual, cash flow to pay the taxes in business. Taxes are paid on profit that your business makes, not on the amount of cash that you have. So there's a big disparity in, what those two things are. I've talked about how your profit is not equal your cash, and in business those two are two different things. And that's why tax basically mess up a lot of people, because they're saying that I have so much cash, but why is my tax bill so much more? It's because you pay taxes on profit, not the cash that you have in your account. And that's why there's always such a disconnect if you don't plan properly for it. So the first thing I find why people get into this, tax trap is, the lack of the actual cash to pay the taxes. And the two is also proper planning. Basically, this includes incorporating the cost of taxes into your business model. Taxes is a cost of doing business. What the large companies do is they do what they call a provision for income taxes. Means that they make sure that they factor in a percentage, in their financials, in their P&L reports and so forth, so that they know that at the end of the year, this is how much my tax is going to work out to be. And, I make a profit after I pay my taxes. Similarly, this is, I think, is one of the best practices, and I think that small business owners, if you start implementing that a lot more, you will also see. And also that if you're not able to cover the cost of taxes by your business, the thing is your business is not profitable. You don't have positive cash flow if you're not able to cover your taxes, because you should not be struggling personally to pay your taxes. That money, your business should technically generate the amount of revenue and make the margins on the money to cover your taxes. So when you're looking at, this is what my projections is, I'm planning to make $50,000 a month. How much of that $50,000 is going to go towards, your taxes, paying your contractors and all the other business expenses that you have? So what I would want to say is to think about it as one of your regular or normal business expenses. So the three things that I want to share on if you do owe back taxes, how you can catch up. And as I said, it's super easy for business owners to get on this back trap. If you have a W-2 job and you owe back taxes, then that means that you're not withholding enough. But when you have a business, it's super easy. So business owners don't feel bad or anything if this is your situation. The first thing you have to do is to face it, to face up to it, because guess what? It's really hard to get rid of IRS debt. It's really hard to get rid of them, especially when they decide that they're ready to collect from you. So the first thing I say, you have to face it. And one of the ways you can do this is to request a statement of account from the IRS. So this is like a 5 to 10 minute process. It depends on how patient you are, that you can go on, irs.gov, irs.gov, and search for transcript, IRS transcript. And they have a pretty good system where you can request it online. So you're going to use the transcript login and you're going to sign up an account. And once you sign up for an account, then you're going to see different options. Do you want a transcript or do you want a statement of account? You're going to select that you want a statement of account. And that statement will show you all your outstanding balances. If in case the IRS adjusted your return and you didn't know about it, so for instance, you moved and you didn't update your information, so they weren't able to get in contact with you, because the IRS sends you a letter. They're not going to call you or anything like that. They'll just keep sending you a letter until they get tired of you and hold on to your refund at some point, or do something, or when they get your updated address. So you request a statement of account, and what the statement of account will do is that it will show you how much balance is outstanding for the number of years, penalties and interest. So it will give you a snapshot of how much it takes for you to settle your account. And the second thing that you're going to do after you find that out, for all those back years, to go ahead and set up a payment plan. It is super easy as well to set up a payment plan. It's probably like a 10-minute process as well to set up a payment plan. And the cool thing about the payment plan is that it dictates how much you can afford each month. But we all know that the smaller amount that you pay, the more interest and penalty will, accumulate, and you want to make sure that you're paying enough that is more than how much new interest and so forth that will be charged to your account. And so that's the second thing, is to go ahead and set up a payment plan. If you're able to make the payment all in one, then cool, go ahead and do that. If you can't, then you go ahead and set up a payment plan. You can set it for 12 months, 24 months, or whatever, based on your budget or your financial situation, and to take care of that. And then the third thing I'm going to talk about, which is the most important step, is to how do you plan going forward so that you don't keep adding to that balance. I mentioned that it's similar like a credit card, that if you keep charging your credit card for more than what you can pay each month, before you know it, you're going to have a large balance. So how do you prevent adding back? I see a lot of business owners that each year they'll just keep, rolling their new balance into, a payment plan or something. And, that's not advisable. That means that, your business is not making, enough money to cover taxes. You're paying yourself too much, or whatever dynamics that your cash flow is working, it's not working correctly, since you're not able to cover, your taxes. And you don't want to keep adding to that balance. I mentioned that the IRS debt is hard to get rid of because you're always like 2 years behind. So it's really hard to get rid of. So what you can start doing is, when you're looking at how much money you want to make for that month or that period of time, to also put a reserve in there for taxes. You can open up a separate bank account. You can put it at a different bank. You cannot get a debit card. You cannot get a checkbook. You can make it, if it's something that's hard for you, you can make it impossible for you to want to go ahead and move that money. You can also put yourself on payroll if that's easy for you. You can put yourself on payroll so that your payroll company can continue to withhold the taxes for you, so that you don't get into this situation. So factoring that amount, I have a worksheet that my clients use, and I use myself, to making sure that each month you have some amount of money put aside for taxes based on the revenue that you brings in for that month, and I can send that to you as well. So as I mentioned, that getting out of IRS debt, it's really important you reduce the amount of interest and penalties that you owe. No, a lot of people, if you don't like debt and to carry around with you, the IRS that I mentioned is very hard to get rid of. Especially when you're new business owners, like they always want these really life altering situation for them to address change your account or give you a reduced payment or something. And you don't want to come to it or get into those situations where you're paying a person like thousands of dollars to get an IRS resolution that really doesn't work. And the third thing is that if you're running a business and you're thinking about profitability and cash flow, make sure that you're able to cover your taxes, because if you're not, then your business is technically not making a profit, or your business is not having positive cash flow. And for the health of your business and for you to continue to make more money, we want you to make a profit and also have a positive cash flow. And when those two things are in place, then you'll be able to have money to pay your taxes. Either you can do payroll, or you can do it through estimated taxes as well. So those are the three things that I wanted to share with you today. Owing back taxes is not uncommon for business owners. A lot of business owners and even 1099 contractors, they get into this issue because it's something that they did not anticipate. It's something that they just run into. So please let me know if you have any questions. As I said, I have a simple worksheet that I can share with you on how you can basically allocate your tax dollars each month based on the amount of revenue that your business is bringing in, so that you can avoid this situation. And I can send that to you if you request it. And thank you for watching, and I will talk to you soon. Thank you.